Are you afraid you're going to run out of money before you run out of life? Well, in this video, stay tuned because I'm going to show you how to maximize your retirement and turn a small account into $5,000 weekly with proven options trading technique. So here we go. Now, if you're like most people, you're afraid of running out of money in retirement, right? You won't be able to work. You won't be able to bring in the same amount of money that you bring in when you're a little younger, or maybe you just want to retire a little bit earlier. And I can't think of a better way than doing it by selling options. I'm not talking about being a gambler and buying options. I'm talking about selling options. And in this video, what I'm going to do is I'm going to show you some of the strategies that I've used and I show other people how to use to be able to bring in options income, steady retirement income for the rest of their life. Now, it's going to be some math in this video. I'm going to show you a bit how I've done it in my IRA to go from $111,000 to $700,000+ in 3.5 years. And I'm going to show you how you can do the same thing. But stick with me on that because here's what we're going to cover. We're going to start talking very briefly about options trading and what options are and how they can lead to passive investment for your retirement enhancement. Number 2, how to transition from traditional stock investments to options trading so you can get higher returns. And number 3, the importance of learning a systemized approach to options trading for consistent income. I'm going to show you step by step how you can start to create passive income in your account of $5,000 a week. I'm going to play around with some numbers so you're going to get the idea. So who am I? My name is Mark Yagi, and I've been involved in investing since I was a kid. My dad showed me how to invest when I was 12 years old, and I started putting money into the stock market. I eventually bought my first car, and I've basically been hooked ever since. And it doesn't always work out perfectly, but if you have a proven system and stick to a trading plan, it does work out over time. Here is the problem. There's a lot of misconceptions about the stock market. Have you ever heard this? Put your money into a nice diversified portfolio of stocks, bonds, mutual funds, real estate, gold, real estate investment trusts, all these kinds of things. And so what people do is they over diversify. They have too many assets. And one asset goes up and the other one goes down. And one goes down and the other one goes up. And they all kind of just muddle around and give you this average return. Well, if you don't beat inflation these days, and inflation's anywhere between 10 and 20%, I think it's about 15% a year now. I don't care what they're telling us. If you're not beating 15% a year, you are actually losing money in buying power. So you've got to stay ahead of inflation. You can't just put your money into a CD anymore and hope to get 3, 4, 5% or whatever they're paying. You've got to put your money in and you have to get what's called alpha, which means you have to beat the market. You have to beat the average. You have to beat inflation. So most people, what they do is they just put their money in a portfolio and they don't want to look at it, and they end up with an average result. And that means that they're losing money over time. And they're going to run out of money before they run out of life when they go into retirement because you can't buy as much and you can't work then either. Most people shoot for average, but most of the time they miss, right? Because people have to get paid for giving them that average. So those are some of the problems. The challenge is, how do you generate consistent income? Because I think the days of buy and hold, I call it buy and hope, are over. You don't just buy a stock and sit back and wait for 20 years and hope it goes up. Yeah, that can work if you're a good stock picker, but you have to be a good stock picker, and if you're wrong, you have to have some edge. And that's what I talk about in my program called the Cash Flow Machine, where you get a little bit of an edge because you bring in income from selling calls, from selling covered calls. So I'll talk to you about that in a second. So how do you beat inflation? How do you beat the averages? How do you create income? First of all, you have to have a desire to create income. And then what you have to do is you have a system, a proven system that works over time in good markets, in bad markets, in sideways markets. But the real edge is to have probabilities on your side through an income-based system. You see, I've owned a lot of land in my time, right? I've owned vacant land and basically have to sit there and wait for the land to appreciate in value. Well, the land is the land. It doesn't appreciate in value. It appreciates in price. The value is still the same. It's a piece of land. Maybe it's worth a little more because it's closer to town now or something like that. The bottom line is it just doesn't appreciate in value. It appreciates in price. And so what you end up having to do is wait, right? And that's not a great strategy because you're not bringing in any income. So the best way that I know to create wealth is to have income. That's what all the people that I know that are wealthy, that I interview all the time, that's what they do. They're bringing in income. They're buying assets that create cash flow. And I have a program called the Cash Flow Machine. And I'll just tell you real quick what it is. It's got 4 cornerstones in it. You've got to buy the right stock in the right market at the right spot on the chart, and then you have to collect the rent, or what I call in the program, squeezing the juice. That means you're collecting money in income from some gambler out there that's willing to pay you money so he can take a gamble, take a risk. And what you're doing is you're just collecting money. If you want to know a little bit more about covered calls and how they work, check out this video right here. So basically what you do is you buy a stock. Let's say you buy some Amazon stock or some Apple stock or Google. I'll show you a trade on Google in a minute. You buy Google, right? And you own the Google stock. And then what you do is you sell calls against it, call options. Now, somebody else has the right to buy your Google at a predetermined price before a predetermined date. And for getting that right, they pay you some money. That's your income. That actually lowers the cost on your shares of Google, so that if they do go down, you have a hedge against that down, right? So that's what covered calls are. And the bottom line is they not only hedge you, but they create that income. So the goal is to manage risk, because anybody can click a mouse and buy $100,000 worth of a stock. The question is, what do you do after you click the mouse, right? Is there a strategy? Is there a plan? Do you have some rules? Do you have a system? Do you not quit? Do you stay in the game when the market is going against you because you know your plan will work over time? Or do you quit? You sell right at the bottom like a lot of people do. So I've got this little trade that I put together that I want to show you exactly how it works, right? It's the right stock, Google, in the right market, we're a green market, at the right spot on the chart. It's at the right spot on the chart. It's about to break out. And we squeeze the juice. And I'll show you exactly how all that works right here. The best way for me to kind of show you the system of the 4 cornerstones is to actually do a trade or show you what a trade would look like. So I'm looking at this stock right here. This is Alphabet or Google. It is a great stock. You can take a look over here and you can see 27% return on equity, growth rate of 24%. They only have 5% debt. They're putting 14.8% into research and development. They're growing double digits all the way over here on the earnings per share. Really, really good quality stuff. Their sales is growing, their earnings are growing. This is the kind of stock that has the fundamentals of a super stock. And of course, we know that Google's a super stock, but they happen to be in the right market. And I'm going to show you, this is the right spot on the chart. So we got the right stock in the right spot on the chart. Here's a quick snippet of the market. It is green. Trust me when I tell you that. There's 4 green lights right now as we sit here today. So that market is helping us. That's 3 out of 4 of the things that we want on the cornerstones to be working in our favor. Now we just got to figure out, how do we collect the juice? How do we collect the rent? How do we squeeze that juice? So here is an option chain. An option chain is basically a grid of all of the options that are available on a stock. And so what I'm doing is I'm doing a monthly option. Google closed at 155.40, or that's the price here on this snapshot. And I'm going out 29 days. Now it's at 155.40, so I'm going to look at the 155s, slightly in the money calls. And if you don't know what I'm talking about, that just means that the stock is trading a little bit higher than the strike price. Then I go over here to the bid column. That's the price I get when I sell, because I'm an options seller for passive income. And so I want that passive income to come to me. So I'm going to sell, and I'm going to get $665 for that option that expires in 29 days. You got it? So the stock price is at 155.40. I'm going to get $665 for the 155 option. So I put it into my handy dandy cash flow machine option calculator. Let's go to the top, 155.40, and that's the price of the stock. The call price, I told you, just is $665. The strike price on that is 155. I'm going to do 500 shares for 29 days. And then we're going to let it do the calculations. And it basically says I'm reducing my break-even price to 148.75. What does that mean? Well, the stock can decline from 155 to 148.75, and I still haven't lost any money, right? Because I've gotten the income from the seller, from that Bob out there that's giving me that money. I've created $6.25 worth of juice. I call it juice because it's time premium. And then that makes it about 4%, which brings me in about $3,125 as long as the stock stays over 155. If it doesn't stay over 155, there are things that we do that are beyond the scope of what we're talking about here, so that I can, to make adjustments so that you can handle your risk a little bit better. But if you can annualize that, if you can do that same trade over and over again, 12 times this year, you end up making about 53%. Okay? So that's how this works. You find the right stock in the right market at the right spot on the chart, and you squeeze the juice. So I hope that makes sense. Okay, so that was Google, right? Now that's a 4% per month return. We shoot for 2 to 4% a month. So let's go ahead and look at the spreadsheet here that I've got in front of us. But let's assume what we can get 4%, and we're starting with just a $100,000 account. Our eventual monthly income, we want it to be $20,000. That's $5,000 a week. Let's call it $20,000 a month. At the end of year one, if you end up getting 4%, your account value has actually grown to $153,900. $945, and you created some income in there. But you haven't gotten to your $20,000 a month, so you've received no income. The money just stays in there and keeps compounding. Year 2, it goes to $246,000, and you've created $859 worth of income, but it's still not your $20,000 a month. Anyway, you get the idea. So that by year 4, now you're starting to take out a monthly income of at least $20,000. And if you notice, your account is still growing, right? And it increases its growth as it continues to move forward, but you're still getting your $20,000 a month plus, right? The income received is this green here. The income created, we're always creating income because we're always selling calls and getting the income. And then you can see our account value kind of has, plateaued here at the bottom as we start to take out income. It's a rough spreadsheet, but you kind of get the idea that, if you calculate all these things right, you could start to pull out some money. That's the baseline. Let's change some assumptions. Let's say instead of starting with 100,000, we start with 150,000. Okay? And let's say instead of getting 4% a month, we get 3% a month. And let's say instead of taking out $20,000 a month, we just want to take $10,000 out every month, right? A little bit more realistic. Would you agree? If you have 150,000, and hopefully you do. So we're going to start with that assumption. And so you can see that in year 3, you can actually start pulling out your $10,000 a month, right? By just getting 3%. Now you started with a little bit higher number. Let's say you've got an account worth $500,000. You can immediately start taking out your $10,000 a month and look at your account grow. So that in 15 years, your account's worth $1.1 million, but you've also gotten a ton of monthly income, right? And so that's really the goal, is we want to show you that you can build your account, and then once your account gets built to a level, you could start creating that cash flow. Now the cash flow goes into your account and reinvests the whole time. You're always getting the cash flow. It's just you're not taking the cash flow out. Of course, that's a different way to structure it. But the way to do it here is you've got to be systemized. You've got to have an approach where you're like, okay, I'm going to make the covered call money every single week. I've got to sell calls to make that money. And you can't stop. You got to have a long-term view. Now, what does that mean? Well, you've got to have a system, because not all markets go up. Some markets go down. Like in 2022, we had a bear market where it was like every month went down, right? Those are going to happen. You're going to have market corrections. You're going to have a market crash. You've got to be able to withstand, with a proven system, all of these things that happen, because it's not all hunky-dory, trust me. How do you do it? Well, the first thing you have to do is, in a system, you've got to manage your emotions. So every system, any system that you get involved with, first off has to address managing your emotions, right? You've got to keep your emotions in check. I always say, when emotions go up, intelligence goes down. So you're making money decisions when you're emotional. That's a bad formula. So you got to get rid of the emotions. How do you do it? You got to create a trading plan. And it's not just buy and hope, right? You're talking about creating income, and there's some work involved, there's some discipline involved, but it's worth it, right? Because if you can get 3% a month over time, it turns out to be a big number. The system has to have what-if scenarios built in. So what if the market goes down? What if the stock goes down? What if it goes up? What happens in these different situations that most people don't address because they don't have a system? They just buy the stock because they heard Kramer talk about how great it was, and then they just hope, right? And I don't want you to just hope. I want you to have a system that says, well, I've already planned for this in a very unemotional fashion, that if the stock goes up, I do this. If the stock goes down, I do this. And then what you have to do is have rules set up around that, maintain the discipline around that, and don't quit. Because you're trading a proven plan, and the market will figure out a way to get you off your game, get you out of your plan. And if you quit, they win. So you've got to stick with your plan. I was challenged in 2020. So I had this IRA sitting around. I said, you know what? I'm going to use this as my sample account, as my example account, as my show the world account kind of thing, and really also prove it to myself. And I had $111,000 in this IRA. Here's a screenshot from Schwab. And you can see that $111,000 grew to, well, it actually at one point was up over 758,000. But in this screenshot, you're just seeing that it was up, almost $700,000 over a 3.5-year period. Now, there's a lot of fluctuations there, which is why I say you have to have a system and you can't quit. Because I could have quit at the bottom. I could have quit when I was right around what the S&P 500 was doing as a return, but I didn't quit. And because I didn't quit, I ended up getting like a 457% return. I'm not saying it's typical or atypical. I'm saying I did it. And so I can show you how to do the same thing if you're willing to learn. And if you're willing to learn, I'm all about it, man. I want to help people learn things. So the way I do it is I teach people through courses and programs. I have a course called the Cash Flow Machine. I call it that because you put money in and then you get money out for retirement or income or retiring early or just creating extra income. It's all about the income for me and all about the income for the students that I teach. And so the idea is that I'm going to show you through the master course that I have. Hopefully you'll sign up for it right after this. And if you watch this master course, it's going to teach you the philosophy and the thinking behind putting a system together, right? And so that's the goal, is so you understand kind of what went into the thinking and the philosophy behind the system. Because if you don't have a system, you're doomed to fail. Trust me on that. If you can get some income and you can get it safely and reliably every month, and the way I do it is by selling calls. There's a couple other ways I do it as well, but right now I'm talking about selling calls. Then over time, you can create an income for yourself and still grow your portfolio and stay ahead of inflation, which you've got to do if you're going to be investing in the market. Otherwise, you're losing purchasing power and buying power. So listen, there's a link somewhere below. Click the link below. Watch the master course right now. I can't wait to see you on the inside. And maybe we'll meet down the road someday and we can swap stories about how we're making money in investing. Take care. Thanks for your time, and I'll see you soon.